If you are a beginner in Forex trading, this video is for you and I hope that you find it helpful. But just before you start watching this video, there's something that we should clear. Forex trading is not a get-rich-quick scheme. So if you are here because you want to start trading Forex today and start making money tomorrow, then maybe you do not need to be here. Just like every other profession, you need to learn the basics of Forex trading before you actually start profiting from it. If you wanted to become a doctor, you need to go to medical school, learn, and then become a doctor. Same goes for being a lawyer, being a mechanic, whatever it is. And Forex trading is just like that. You need to learn, understand the basics, practice, then you become a pro trader. Now that that is out of the way, in this video, I'm going to be showing you a step-by-step guide of what you need to know, some of the basics that you need to know before you start trading Forex. I'll walk you through how to choose a broker, what to look out for in a good broker, what are some of the basics that you need to learn, how to even open an account, just some of the very basic things that you need to first of all know and learn before you ever start trading even demo. So now that we are ready to learn, and we know that Forex trading is not a get-rich-quick scheme, let's get started. What exactly is Forex? In simple words, Forex stands for foreign exchange. That is the buying and selling of currency. You make money when the price of one currency moves up or down against the other one. For example, if you trade the US dollar against the South African rand, if price moves in your favor, you make profit. In Forex trading, currencies are traded as pairs, and that's why you would always see the currency like displayed in pairs. You can see Euro USD, USD ZAR. You just notice that the currencies are displayed in pairs. When you buy a currency pair, so for example, you buy Euro USD, it means that you are buying the first currency, so you are buying euro, and you are selling the second currency, so you are selling dollar. And when you sell, it is the opposite. So for example, let's say you sell Euro USD. It means that you are buying dollar and you are selling euro. Now the question is, how do you make profit from buying and selling these currency pairs? Profit in Forex comes from changes in prices measured in pips. A pip is the smallest unit of movement in price of a currency pair. Let's say, for example, USD ZAR moves from 18.5000 to 18.5100. That is 100 pips movement. If you predicted that price was going to go high, meaning that you sell because then you are buying ZAR and selling USD, you make profit, and your profit will be the difference in your entry price and your exit price. Now, when trading Forex, you can decide how big your trade is. So you decide how much you are willing to risk for that trade. And the size of your trade is measured in lots. A standard lot is 100,000 units of the currency pair. A mini lot is 10,000 units of the currency pair. And a micro lot is 1,000 units of that currency pair. Most beginners often start with micro lot because micro lot means that the trade is smaller, and when it's a smaller trade, it means you are risking less. And of course, as a beginner, you don't want to risk so much because you are still learning. So it's a good idea that you start with micro lots. Don't get greedy. Now, let's move on. Let's talk about leverage. Leverage allows you to control a big trade with just small capital. Leverage is like borrowing money from your broker. So let's say, for example, you want to open a trade worth 10,000 rands, but you do not have 10,000 rands. All that you have for that trade is 100 rands. So you use leverage, and you use a leverage of 1:100. So with a leverage of 1:100, with just 100 rands, you are able to open that position worth 10,000 rands. What this means is that you brought in the 100 rands and your broker borrowed you the remaining money required to complete the 10,000 rands. So now you may be worried, if my broker borrows me this money, what if I make losses and I lose the money the broker borrowed me, will I have to pay back? Well, you don't have to be worried about that. If the trade goes against your favor, it means you made loss. But to understand like the dynamics for you and your broker, you need to understand leverage and margin. And while we cannot cover all of that like in this video because we still have a lot to cover, you may want to watch our video on what is leverage in forex trading. I'll leave a link to that video in the comment section. However, to find that video, just go to MTL Uni here on YouTube and go to the channel and you will see all the videos that we have, and that one inclusive, because you need to understand how leverage and margin works so you understand how you lose when you use leverage. Now, when you use leverage and you are able to control a large position, you want to be very careful because a larger position means that you are entering higher risks. Remember what you talked about, that micro lots means smaller risks. And when you open like larger positions, it means you are taking bigger risks. When this happens, if the market goes against you, it is very easy for you to lose money. So when you are using leverage, always keep in mind that leverage is a double-edged sword. It can increase your profit potential because when you enter a larger trade, small pip movement, you make good profits. However, when the trade goes against your favor and there's a loss, you are also going to make huge losses. So leverage is one thing you want to be very careful about. Now, I've explained a few terminologies like leverage, pip, lot, and even currency pairs. However, there are many more. And to properly trade forex, you need to understand these basic terms. What is swap? What is leverage? What exactly is lot size? What is spread? What is commission? You need to understand all of these because that way you're able to make better and informed decisions regarding your capital. Now, we definitely cannot cover all of that in this one video. And that's why I keep making reference to MTL Uni. Just go to MTL Uni here on YouTube or visit mytradingland.com and you'll see that we've carefully made videos to explain these things to you and how they impact you as a trader. And I know that you would find that channel and that video helpful. You can also visit mytradingland.com, our free forex trading community where you can interact with other traders, and on the university tab, learn the basics. On mytradingland.com, we do not have only videos. We have both videos and text-based like educational resources that will be very helpful to you because learning is very important. Now let's carry on. When you are finally ready to start practicing forex trading, the next thing you want to do is to choose a broker. Your broker is a middleman that connects you to the forex market. Without your broker, you cannot place trades. But here's the key. Not all brokers are safe, and that is why choosing a regulated broker is very important. In South Africa, brokers are licensed and regulated by the Financial Sector Conduct Authority, that is the FSCA. If a broker is legally licensed by the FSCA, it means that they are legally registered to operate in South Africa and they must follow strict rules set by the FSCA to protect traders. Regulation is important because it protects you from scam and unlicensed brokers. It also helps protect your funds to make sure that that money that you've deposited into your broker account, like your trading account, is safe. Usually, licensed brokers are required to keep traders' money in a separate account from the company's account. That way, your money is safe even if the company goes bankrupt. And also, in case there's a dispute, so let's say you have a very serious issue with a broker. When that broker is licensed by the FSCA, you have legal grounds to pursue that issue in court, and that matter is going to be judged based on the framework that the FSCA have set in place for brokers' operation. So now that you know why it is important for a broker to be properly licensed in South Africa, you should also know that it is very easy to confirm that a broker is licensed in South Africa. Now, for most brokers, you may see their license number by the FSCA in the footer of like their homepage. However, you can always confirm by yourself by visiting the FSCA website and like entering the name of the broker. There you confirm that that broker is regulated in South Africa. You should also note that brokers in South Africa are required to have two licenses. They can have the regular FSP license and also an ODP license. In the video on how to start trading Forex in South Africa on this channel, I took time to explain these different licenses and what they mean. So you can also watch that video to learn more. So now you understand the importance of regulation. However, there are so many brokers that are regulated and legally registered to operate in South Africa. They have the FSCA license. So how do you choose from these brokers? Let's do a quick rundown of what to look out for when choosing a broker. First, of course, regulation, which we have already talked about, so I'll not go into that again. Next, you want to look out for the trading cost. How is their spread like? Do they charge commission? Do they charge swap fee? You also want to look out for the customer support. Do they have a South African support and quick response? How fast do they respond? On live chats, when you call them, how fast do they respond? You also want to be on the lookout for their deposit and withdrawal conditions and methods. Do they support local payments like EFT, card, bank transfer, or do they even have instant deposit? How long after making deposits do you have to wait to see the money reflected in your trading account? How long does it take you to withdraw money? So after you've made profits, how easy is it for you to withdraw your profit? You want to look out for these things. And finally, you want to look out for the platforms that they offer. Do they support MetaTrader 4 and 5? So you want to look out for that too. If they have a proprietary trading platform, how good is that platform? Those are a couple of things you want to look out for. Here's a mistake that most beginners make. When choosing a broker, they fall for flashy ads on social media that says deposit 500 rands and make 5,000 rands. The truth is that real brokers do not promise profit. Brokers just offer you a good platform and good trading conditions. Your profit will be determined by your skill. How much of Forex trading do you know? So when choosing a broker, you see those ads that you see on social media, don't fall for them. Always do your due diligence. It is free of charge to download a broker's app. Go through it, attempt depositing and withdrawing. And if you find out that this app or this broker is not for me, always feel free to change. Some popular and widely used regulated brokers in South Africa include XNext, HFM, and XM. We have a video on this channel for best Forex trading brokers in South Africa, so you may want to consider watching that review as well. Before we move on, you should also know that you may not exactly find a broker that's 100% perfect. So you may notice that this broker charges high spread while the other broker does not charge high spread but charges commission. So at the end, you just want to cancel out the features to see what matters most to you and choose a broker whose trading conditions align mostly to your strategy and your style. So now that you know how to choose a broker, the next thing is to open a trading account. So let's talk about how to open a trading account. And don't worry, opening an account is usually a very seamless process and you should not find it difficult. Now you should note that there are two main types of accounts. When opening an account with a broker, you'll be given two options: to choose a demo account or a live account. A demo account is where you practice Forex trading using virtual money. So a demo account is just like a simulation. You practice, no risks. When you make losses in a demo account, it is not a real loss. The money you are using to trade is not your money. You are just using it to practice. On the other hand, a live account is a real Forex trading account where your capital is actually at risk and you can make real losses and real profit. The profit from your demo account is not real. You cannot withdraw it. But the profit from your live account is real. As a beginner, it may be a good idea for you to start with a demo account. So you want to first start practicing Forex trading using a demo account where there is no real risk. That way, you can use it to test out strategies that you are learning. Use it to understand how that broker's trading platform functions. And also just use it to see how you can actually lose money or profit money in Forex trading without actually risking real money. And after you've practiced, you can now open a live account. People usually ask, how long should I trade demo before I start trading live? But the thing is that the duration may actually be different for different people, depending on how much time you're putting into practicing. Now that you have that out of the way, let's see how to open a Forex trading account using XNext as example. Go to the XNext website or app, click on Open Account. Enter your email address, your phone number, and a password. And of course, select your country. So once you sign up, you get access to your dashboard. After that, you'll be required to verify your account. And this process of verification is called KYC, Know Your Customer. And it is usually done for a live account. So on XNext, you can have a demo account, a well-functioning demo account without verifying your account because then it's demo. But to have a functional live account, you need to verify the account. You need to verify your profile. Now, the verification process is required by law to verify your identity. And it requires that you upload a valid identity card or passport, and you also provide a proof of address, say maybe your utility bill or your bank statement. And you should note that during the process of KYC, most brokers will also ask you certain questions about yourself. For example, they may ask you about your income range. They may ask you your reasons for opening an account and wanting to trade Forex. And they may also ask you about the level of experience you have in Forex trading. So be open to answering those questions and providing those valid documents that they have requested for. Once you properly go through the verification process, which is usually easy, just follow the prompts depending on the different brokers. You are ready and your account is good to go. Once your account is open, here are some details that you want to keep and make sure that you do not lose them. So first, you want to keep your trading account number, like your login ID. Next, you want to keep the server details because these server details will be important in case you want to link that account to MetaTrader 4 or MetaTrader 5. And you also want to, of course, keep your password. That's the password that you use to open the trading account. That password will also be useful if you are trying to link that trading account to MetaTrader 4 or MetaTrader 5. So once you feel like you've practiced enough on demo and you now understand the strategy you want to be using to trade, you can now go into live trading. And to start trading live, of course, you have to deposit money. Usually, brokers give a plethora of deposit and withdrawal methods like local bank transfer, ETFs, cards, Skrill. So just decide whichever one works best for you and of course make use of it. Before we move on, it is important to note that some brokers give bonuses. So for example, a broker like XM is known for giving bonuses, sign-up bonuses. However, you should not choose a broker solely on the fact that they are going to give you bonuses when you sign up. Choose a broker because you believe that this broker's trading condition suits your trading style. Most brokers have their proprietary trading platform like XNext. XNext has their web trading terminal and their mobile app. And they also allow you to link your trading accounts to MetaTrader 4 or MetaTrader 5 to trade. While some brokers are strictly MetaTrader brokers, they only allow you to trade on MetaTrader 4 or MetaTrader 5. Now, if you are using your broker's proprietary trading platform, all you need to do is trade on the platform. If it's the web platform, you trade there. If it's the app, you download the app and trade on that app. But if you want to link that account to MetaTrader 4 or MetaTrader 5, so you don't want to use your broker's proprietary trading platform, you want to use MetaTrader 4 or 5. Here's how to link your account to MetaTrader 4 or 5 or mobile. Download MetaTrader 4 or 5 and then go to settings. On settings, click on account, then click on the plus icon to add a new account. Enter your login details, that is your login ID, your password, and of course choose your server. Make sure you enter the correct details. And once you are done, you can sign in. Once you are connected, you can now see real quotes, see the charts, and trade on MT4, MT5. Note that you can always link your account, whether it's MT4, MT5 or MetaTrader, using either mobile or desktop, and the process is usually just very seamless. On MetaTrader 4 or 5, you can see the market watch window. That's a list of currency pairs. You can also see the chart window where you see like price movements in real time. You can see your other buttons to buy or sell where you open trades. And of course, you can see your terminal window buttons. This shows you your balance, your open trades, and your history. So now that your account is set up, whether it's a demo or a live account, the next thing, of course, you want to do is to maybe start trading. If it's demo, you are practicing. If it's a live account, you are actually trading and you are risking money. And to trade, you need to have a trading strategy. In Forex trading, if you are not trading with a strategy, you are just gambling. You are guessing. And sometimes your guess may work out for you, but most times it is most likely to fail. And you don't want to act that way. You don't want to gamble. So you need to build a strategy. Now, what exactly is a trading strategy? In simple terms, a trading strategy is a simple set of rules that you follow before you enter a trade, during the trade, and when you exit the trade. Your trading strategy tells you when to buy, when to sell, and when to stay out of the market, when to do nothing. You need a trading strategy because it helps you make logical and informed decisions. It helps you avoid chasing the market, and it also helps you stay consistent because you have a strategy that you are growing and building. On mytradingland.com, when you visit the unit tab, you would see that we've taken time to make videos to help you build a strategy. We have videos on support and resistance, price action, candlesticks pattern, Forex chart patterns, just different tools that can be useful to help you build your trading strategy. So you may want to go to mytradingland.com, the unit tab, and see those videos. Learn how to use those different tools and then practice them and build a strategy for yourself. However, here are some simple tools or strategies that you can start practicing in your demo account as a beginner. First, support and resistance trading. The market often respects certain levels where price bounces off and on, and these levels are called support and resistance. So the support is that particular level that every time price gets to it, price is unable to continue moving downwards. And the resistance is any particular level where anytime price gets to it, price is unable to continue moving upwards. On this chart, we've been able to identify support and resistance zones, and we can use this now to make trading decisions. We have a full video on support and resistance and how to trade with support and resistance, and I will encourage you to please watch that video. I'll leave a link to that video in the description. However, you can easily find that video on mytradingland.com, the university tab. There's also a type of trading strategy called price action trading, where you use only what the price is saying. Like, you look at the chart and make trading decisions based on what you see on the chart, what price is doing. And this price action trading and support and resistance, or the different trading strategies, they take time to explain, and that's why we've done full videos to help you understand them. So please, once again, I'll encourage you to see the video on price action trading on mytradingland.com. Now, I know that as a beginner, you want to start making money already. It's understandable. You are putting in money, so you want to see profit. However, here are a few tips to help you so you don't end up just using your emotions and blowing up your trading capital. First, don't blindly copy signals from social media. So you just go on Twitter and you see somebody drops a signal and you just copy it. Or somebody advertises a Forex trading signal group, and without proper research, you just jump into that signal group. That's not the best. You might end up blowing your trading account. And sometimes, to even use signals properly, you also need to understand the basics. If you understand the basics of Forex trading and you are able to actually put yourself together, identify a good setup and trade, when you see a false signal, you may be able to tell. But when you don't even understand anything about Forex trading and you just want to start trading, how do you know when a signal is even false? So don't jump blindly into copying signals that you see on social media. Take your time to build a strategy. And after building your strategy, sometimes you are going to lose money even with that strategy. You don't have to jump from one strategy to another every day because you lost money the previous day. When you lose money, look at the trade. Identify and see, oh, what can I learn from this trade? What mistakes did I make? And then use it to adjust your strategy, not to change strategy entirely. Because if you keep jumping from one strategy to another, you'll find out that every day you're using a new strategy and you are not developing yourself. You're not developing depth in any particular strategy. So don't always be in a hurry to switch. Adjust. Learn from losses and adjust. Learn from your profitable trades and adjust. And finally, don't trade because you feel like. Trade only when you see a setup that matches like your strategy. Trade only when you see a good setup on the chart. You don't have to trade every day. And of course, as a beginner, start with demo. Practice. You saw a new strategy. You watched our video on support and resistance. You practice on demo account. You saw our video on price action trading. You practice. You saw the video on Forex chart patterns. You practice it on a demo account. By practicing, you'll be able to build a strategy that will work for you. So I hope you find this helpful. Now let's move on. Let's talk about risk management. It is very important to protect your trading capital. If you blow all of your capital in one trade today, then how do you trade tomorrow? So you need to protect your capital. And risk management is all about controlling the amount of money you could lose in a single trade. Remember that in Forex trading, losses are normal. Even professional traders lose money. Sometimes the trade goes against them. But the main thing is that with risk management, you are able to control your losses such that one loss does not wipe out your entire trading account and then you are back to square zero. The golden rule for risk management is to never risk more than 1 to 2% of your trading account on a single trade. So for example, let's say that your account is at 1,000 rands. What this means is that if you are risking only 1 to 2%, you are not allowed to risk more than 10 rands to 20 rands on a single trade. So what this means is that for every trade, the maximum loss you are willing to take should not be more than 20 rands. This way, even if you lose 10 trades in a row, you still have money to trade again. Some tools that can help you with risk management include, first, stop loss. Stop loss is like an instruction that you give your broker to automatically close a trade if the market is going against your favor once price gets to a particular level that you have chosen. Without stop loss, one trade can wipe out your entire trading account. So it is always advisable to use stop loss. When setting up a trade, whether it's on MetaTrader or on your broker's proprietary platform, you see that you are required to enter your stop loss. Stop loss is useful for controlling the amount of money that you lose per trade. Another tool is take profit. Take profit is also an instruction given to your broker to close your position once price moves in your favor and gets to a particular level. Take profit helps you avoid greed. Without setting your take profit, you can set up a trade, a winning trade, and then you go maybe to sleep or you go to cook or whatever. Maybe you end up being on a call with a friend. And before you come back, you notice that price moved in a direction that favors you and have started moving back. And because you did not use a take profit, price moved up, you did not take any profit and has started reversing back. And your trade may end up becoming a loss, or you will not make as much profit as you would have made. So use a take profit. Don't be greedy. Don't say, let me be watching it. Once, let it continue going high. Don't be greedy. Win today. Keep celebrate the win, and plan for tomorrow. Another thing you should know is that you should control your position size. Use a lot size that aligns with your risk percentage. We have a video on mytradingland.com university that explains lot size in forex trading. You want to take time to watch that video to understand lot size and how to choose the right lot size for your trade. You would find that video helpful. See, if you really want to be profitable in forex trading, you must be willing to learn. So when I refer you to these videos on mytradingland.com, or you can find them here on YouTube on MTL Uni, watch them because you'll find them helpful. And if you do, always leave a comment so we can know. When you start trading with a real account, it is always advisable for you to start small. Consider using small lot sizes. When you start small, you are able to stay calmer because see, on demo, you can play around with 100,000 rand. And even when you lose all of it, you don't feel anything because it is virtual money. But with live trading, it is different. Even if all you have is 100 rand, once you deposit that 100 rand, the feeling is different. So you don't want to get greedy and start over leveraging just so you can make more money. No, calm down. Start small. Start with small lot sizes. Start with micro lots. And then over time, you will see that you are able to build up and of course, make profits. You have more profitable trades than losing trades. In forex trading, if you cannot manage 500 rand, you cannot manage 50,000 rand. So start small. Use small money to practice. You don't even know how well you fare in a live trading account and you want to start with a leverage of 1:200. You can wipe out your entire trading account. Be content and comfortable with starting small. It takes patience. As you continue to practice, you start increasing your capital. You start taking more risks because now you're using more money. But put risk management in place and be willing to grow. It's a process. This is one common mistake we've noticed traders make. So you start live trading and you have the beginner's luck. You start and the first day, it's a lot of profit. It's raining profit and you are so happy. And you started with 100 rands and the very following day you decide, I now know better. You now start over leveraging. You want to control positions worth 100,000 rands. When you lose, it's going to be bloody. So be calm. Manage your emotions. Finally, in forex trading, you should know that there's something called fundamental analysis. Now we talked about support and resistance, price action trading, candlesticks. All of those things are under technical analysis, including indicators, technical analysis. There's also something called fundamental analysis, where you pay attention to news. There are certain news events that can disrupt the market. So you want to pay attention to this news event. For example, the NFP job report released by the US Fed every first Friday of the month. This report impacts any currency pair that contains dollar. Interest rate decisions impact currency pairs that it concerns. If the South African Reserve Bank increases interest rate, it is going to affect USD ZAR. It is going to affect every pair that has ZAR in it. If the European Central Bank increases interest rates, it is going to influence every pair that has euro in it. So you want to also pay attention to news from regions of currency that you are trading. So that way you don't mistakenly enter the wrong position when there's an important news release. We have a video on NFP trading on mytradingland.com. You can also decide to watch it. And we would also be putting up a full proper course on fundamental analysis and technical analysis. Even on this channel, we've already started doing that on MTL Uni or on mytradingland.com. So you can also check that out. Finally, you should know that learning never ends in forex trading. So today you learn about support and resistance. Tomorrow you can learn about Fibonacci retracement. There's always something that you can learn that can be helpful to you to improve your trading strategy. Learn about indicators. Learn, be willing to learn. It's just like becoming a doctor. Nobody is going to give you a human being to treat until you've learned. So don't be willing to risk your capital without learning. Be open to learning. On mytradingland.com, we have resources, text resources, video resources to help you learn the basics of Forex, and they are free of charge. Just take advantage of them. But you see, in this Forex trading journey, be ready to learn, pay attention to learning, and be careful to be sure that you are learning from the right source. You are not just learning from somebody whose only goal is to give you Forex trading signals so that you can pay them. Learn from the right source, and there are a plethora of resources available for you. Now, I really hope that you found this video helpful. We'll continue to upload more helpful videos like this one, so definitely you should consider subscribing to this channel. And of course, we are wishing you all the success in your Forex trading journey, and we are hoping that you'll be willing to pay attention to the basics, to learn, and to be willing to follow the process and grow, and not hope to just make money quick and end up losing your trading capital. Thank you very much. Bye-bye.